All right, so in today's video, we're going to speak about 401ks and the index and mutual fund options that they offer. Today, we're going to focus on things like expense ratios, inception dates, and the year to date, and overall 10 years. What I want to do is I'm going to break down why I chose the three funds I have, and then I'm going to give you some easy checklists to do so you know that when you're looking through your job options for mutual funds at your 401k, what not to pick and what to pick, just to give you more of a background and a solid foundation so you can make the right choice to invest in your future. And just remember, if you like this video, go under my playlist, click under long-term investments, and then you're going to get a good comprehensive view of all the videos I make on long-term investing, dividend ETFs, where to start investing, what are ETFs. I have electric vehicles, growth funds, NASDAQ, real estate, total market, how to manage your own money, long-term portfolio revealed. It's all here, one-stop shop. Check it out. So the first thing that I look at is not even the funds. The first thing I look at is expense ratio. This is how much they're going to charge you every single year just for having money within these portfolios. So you really want to be careful and look at the mutual fund and be like, okay, they charge 0.29%. But let me show you how much that's going to cost you once you have a significant amount of money in that account. And this is going to make a difference in your overall gains. So let's focus on this Fidelity Freedom 2060 fund. If you scroll down, you can see here that the fund is an expense ratio of 0.75%. At a 0.75% expense ratio, it's going to charge you $7.50 every $1,000. Now that might not seem like much money, but once you have like 500,000 in there, that's going to cost you
$1 million.
All right, I lied. It's not going to cost that much, but it's going to cost this.
$100 billion. Gentlemen.
So now that we got the expense ratios out of the way, I like to completely avoid these target date funds that are, you'll see 2060. They're always by 5 years, 2055, 2050. I look right for the S&P 500 index fund, which you're going to find that you'll see a top list here. You have international, you have small cap stocks, mid cap stocks, and it's going to be under large cap stocks. That's always going to be the biggest portion of my retirement. And I'm going to look for the S&P 500. Now, when you look for that, we got large cap stocks. You can see the expense ratio right here. And look at the expense ratios. 0.41, it's already too much. 0.73, it's already too much. 0.01, that's what I'm talking about. This is the S&P 500 right here. It's just labeled differently. So you have to be able to pick it out of your funds. Every 401k should have a low-cost S&P 500 fund that you can invest your money in. So let's take a look. So being a brand new beginner, I'm looking for the S&P 500, which you can see on the top left here. That's the benchmark that this fund will follow. The composition is going to follow only United States stocks at 98%. There's only 1% in non-US stocks. All that means is that companies that reside outside of the United States, this index fund holds 1% of that. When you look at this box, this is showing you, when you look at small, mid, and large, it's talking about what each company is worth. So if the company owns over 10 billion in assets, it's going to be in this large area. If it's between 2 and 10 billion, it's usually in the mid. And if a company owns less than 2 billion, usually sometimes a little less, it'll be in the small cap. So it's just telling you have a blend of large cap companies greater than 10 billion. Next is the holdings, the top 10 holdings, and you can see the percentage of assets. So Apple makes up 7.69% of this fund. Microsoft makes up 6.79%. Amazon makes up 3.12%. Nvidia makes up 2.81%. Alphabet makes up 1.91%, and the list goes on. So if you're looking for growth companies, you're pretty much getting 10 right here if you were just to invest individually in them. So you know you have a good basis and you recognize the companies. Next, you can see what sector they're in. So here's the sector, and you can see cyclical is 27%, basic materials is 2%, consumer is 10%, financial services 12%, real estate 3%. So that's why I like the S&P 500. You're getting this well diverse in investment that allows you to basically just buy the broad market of United States of America, which is nice to get all 500 companies that are meeting this criteria so that you know that you're getting a good investment long term. And overall, if you look at the statistics, S&P 500 is the benchmark that everybody tries to beat. So why would you try to beat it in your retirement account? Just join it and try to make the gains each year. Try to average 8 to 10% just following the S&P 500. The next fund we're going to get into is the Russell 2500 Index. Every time you see Russell, I want you to think small cap companies. These companies have like less than that 2 billion. They're much smaller, they're much riskier, but they offer a lot of growth potential. So the Russell, I like to have at least 15% in here. And I'll show you my asset allocation of this 401k at the end of the video. But Russell 2500, US companies, you have 98%. And then the holdings, I couldn't even tell you what these companies are. Hubble is 0.32%, Builders 0.31%. But just notice how the percentage of each company is much less compared to the S&P 500 where Apple was like 6-7%. The reason is because these are risky investments. So this is a higher risk tolerance. A lot of these companies will fail over time, and some of them will do really well. So you want to definitely lower your exposure to this and overall invest into it, which is good just to have that diverse background. But you want to limit your risk because these are small cap companies which haven't established themselves or have long track records. And as you can see, most of these companies, 38% cyclical, and the biggest portions is consumer cyclical at 13%, financial at 12%, and then you have communication services at 2%. But it's really industrial and technology, which makes up a huge percent. So you just want to be careful, but I like this as a long-term investment. I buy, I add over time, and that's pretty much it. This one shows that the Russell 2500 is managed by BlackRock Institutional Trust Company. And long-term, I'll throw 10 to 15% of my portfolio in them and then see how it goes. Last but not least, in my 401k, I have the Fidelity Global X US Index, FSGGX. This is offered by my job. What this means is that this investment seeks to provide total return in foreign developed emerging stocks. All that means is look at this composition over here. US stocks is 0.78. Anything that's outside of the US stocks is 99%. So anything that's not United States, it is investing in. So I want a little bit of exposure to that. I think it's good to have that. Looking at the top holdings, you have Taiwan Semiconductor Manufacturing, Nestle, ASML, Novo, Samsung. And if you look at the overall blend of it, it's a large blend, just how that S&P 500 was, that giant large cap, but it's just outside the United States. So you want to have some exposure in case other parts of other countries are doing well. So I limit my exposure anywhere from 5 to 10% for international stocks because I feel more comfortable investing in the United States, but it's good to have a broader diversification and invest in something outside of the United States. And looking at this fund, you can see that the top 10 countries are Japan at 14% of this fund, United Kingdom 9.3%, China is 8%, France is 7%, Canada is 7%. So you're getting a good variety of investments for these, and you can see that you're at least investing in different areas of the world, which is something that you really want to look into when you're trying to invest globally. You want to have that overall broad picture. So within that 401k, I have 80% invested in the S&P 500. I have 15% in the Russell 2500 Index Fund, and then I have 5% in the emerging markets. All right, guys, so that's what I have for my 401k and what I'm investing in. I hope it helps. Hopefully it gives you a good background to start figuring out how you're going to choose your investments. If you liked it, go through my channel, Trading Simplified, and see what you find, see what you like. And please like and subscribe and leave a comment. I really appreciate it when you do that. Thanks.